Morning, guys. It's Friday, September 5th, 5:29 a.m. Central Time. Grain market's a little bit higher this morning. Brian Split is here with a swear word on his T-shirt. Brian, we love your shirt.
You authorized this ahead of time, so just so everybody knows, I didn't
Yeah,
show up
my
just with this
compliance
Yeah.
department signed off on it.
We need to figure out who it is in the market that's saying this today.
Yeah, I don't know.
Exactly.
Okay, we had a trade deal yesterday. Let's start there.
So President Trump on Thursday finalized a trade agreement with Japan. The deal includes a 15% tariff on Japanese imports and a pledge from Tokyo to establish a $550 billion U.S. investment fund. The agreement, first reached in July, had been delayed as Washington and Tokyo negotiated final terms. As part of the deal, Japan committed to purchasing an additional $8 billion in U.S. agricultural products annually, including corn and soybeans. During Japan's 24-25 marketing year, corn imports from the U.S. totaled 512 million bushels. They were the second largest buyer of U.S. corn on the export market, behind only Mexico.
Huge win for America's farmers and ranchers, says Secretary Brooke Rollins. Brian, I do have some statistics. Do you have any thoughts first?
I just think if it's $8 billion is what they're agreeing to, that's more than what they've been purchasing, and they've been a pretty good buyer of corn. So hopefully that means even more corn, and like this says, throwing some soybeans in the purchases.
Okay, so I did nobody has had time to analyze all of this yet in terms of what it could mean. So I have some very fuzzy math for you here. It looks like Japan bought somewhere between $3 and $4 billion in combined corn and soybeans from the U.S. last year. Rice purchases were probably about $300 million. Japan buys very little U.S. ethanol, but they do buy something called ETBE. That's ethyl tertiary butyl ether. I don't know if you know what that is. It's blended into gasoline, but it's an ethanol product. So if my math is close to reality, Japan is going to have to double purchases of just about everything in order to hit these targets. And I don't know if that's reasonable or not. Like that might get their corn number up to like a Mexico type level, which would be crazy.
Yeah, I know one of the major areas of pushback has been rice, and rice has been a market that's been really under pressure. And obviously, we focus a lot on corn and soybeans and wheat, but the rice market's been another one that's been making new contract lows very recently. Yeah. And there's been some quality issues with the last harvest. So hopefully, this is something you really get that export demand pick back up, because the rice producers are also part of the production cycle here that's under a lot of financial pressure.
There will surely be some comparison between this and perhaps the phase one U.S.-China trade deal, which Trump signed during his first administration. And for comparison, they're talking $8 billion annually. And I'm not sure, Mackenzie, I think you mentioned, or Brian, you mentioned that's on top of what they're already buying. I don't know if it's going to be a baseline and then like $8 billion is the total, or if it's $8 billion on top of what they're already buying. But in any case, the China deal signed in, was it early 2020? That was a $40 billion per year commitment to ag products. So much, much larger. And I know a lot of people say, oh, they never bought that stuff. Yeah, they did. They just didn't buy all of it. This is a graphic from the Peterson Institute, and their estimate is that out of the $80 billion that China committed to last go around, they bought $61 billion worth. So that last trade deal, the big one, the U.S.-China phase one, it was a big deal for the markets at the time.
Yeah, and another thing too is when you put dollar, price tags on it. When China did all of that buying, it was right after COVID. So
Right.
It was when we had corn go to 3 and beans were in the upper 8s to low 9s. And it is a little bit easier to hit some of those dollar targets when you're talking, maybe 4.25 corn and 10.50 beans instead of 9 or 9.50.
I remember talking about this the last go around with the China trade deal, and they shouldn't benchmark this stuff in dollars. It's way too hard to track. They should benchmark it in tons or in a volume, and it would be much, much easier to track. There's like the US government, the Chinese government, they had totally different data sets on this stuff based on dollar amounts, which is very difficult to track. So I don't know. I mean, do you think traders are excited about this? Corn's up 2 cents this morning.
I think there was some late buying yesterday. There was definitely a shift in the momentum yesterday. We had everything down early. The corn market really seemed to lead things back, and I think there was probably some buying yesterday on ideas that this was going to happen, those that are in the know. This is positive, and this is just another thing that kind of turns the table of everything all of the news cycles that we get being bearish to now getting some positive news. And just like the market, we're starting to make some higher highs and higher lows. Now we're starting to get some positive news instead of negative news. So I think we're starting to change the momentum in the market with this stuff.
I'm going to show you a couple charts in a minute to analyze. Before we do that, Brooke Rollins was talking yesterday about farmers in particular. This was before the Japan announcement, but let's do that story.
Right. So she was on Fox Business, and Rollins emphasized that no one has been more dedicated to supporting U.S. farmers than President Trump. Echoing Trump's previous statement, she urged farmers to remain patient amid trade uncertainty, adding that more deals would be announced in the coming weeks. While acknowledging the poor farm economy, Rollins expressed optimism that a golden age for American farmers is on the horizon. She also highlighted the administration's efforts to reform the H-2A farm worker program and stressed the importance of keeping solar farms off productive farmland.
I'm going to play you guys a video clip from this interview, and then we can discuss. Where is it?
No one has been more supportive or passionate or dedicated to our farmers than President Trump, and this period of uncertainty was part of it. But as we have seen, deal after deal after deal hit the world stage, with more announcements coming in the next few weeks, even more exciting deals. That sentiment, we believe, will turn from unease with the current farm economy, which, by the way, is high cost, as you mentioned, of inputs, 30% under Joe Biden, a trade deficit of $50 billion after having a surplus under Trump when Biden left. Just one thing after another that has hit the farm economy. But these trade renegotiations, opening up the markets, cutting deals. Bangladesh just, I believe, yesterday announced a massive purchase of wheat from America. We'll have more of those coming soon. And the golden age for our American farmers is around the corner.
Golden age is around the corner. Agree or disagree?
We're probably going to see multiple golden ages for agriculture, and then we're going to see multiple busts, right? That's the cycle of the market.
That's how it works.
It happens over time. But, I think everybody kind of knew when President Trump was elected that this was going to be part of the process, that things were going to get worse before they got better.
Mm-hmm.
So we definitely did see things get worse to start. That should not be unexpected. I think the hope now is that there's some truth to what Secretary Rollins is saying, and that we do have additional trade deals that are going to be coming down the pipeline. But I think there's one deal that everybody wants to see before they really get excited about any other deal, and that's China, right?
Yeah, it is. And they've the current state of U.S.-China is that we're in a truce period, and there's not going to be another discussion until, it sounded like, October, based on the most recent comments. So that is correct. That's what you're looking for. Before we go to the next story, Brian, I want to show you a couple charts. Here's D's corn. So we're up above this April trend line this morning. I think that July chart gap up at 432 3/4 is of interest to me, at least. What's your take here?
So a lot going on. Yes, we took out the downtrend from April. We've got higher highs and higher lows. A point of interest, I think, is when we had the December contract recover last year into early October, it got up to about 434-ish, and that was about as much as we could get before we had kind of that secondary buying wave that happened from December into February, right? Now, this particular contract, we've got a lot of lows that were made there between March and June in that 34, 35 area. So a very similar shelf. Then you've got a whole set of lows that was made August of a year ago, and then December of a year of last year, and that was at that 28.5 and 28 area. So you're going to have a lot of congestion in this 430 zone. The July high was 30.25. I think this is an area that I do think we could eventually get through 30, but there's probably an area where the first time we see it, we're going to find resistance there. Probably need to take a step back and then regroup and then make another charge at it. But I really think this is a constructive chart. We definitely turned the corner here. We talked about this Wednesday. All we had previously was lower highs, lower lows, lower highs, lower lows. We've been doing that since February, and we've really changed that with having now a higher high, higher low. We're starting an uptrend. So hopefully we could see that continue. But I think the break of this April trend line is important. Getting and one of the things I talked about with Mackenzie was maybe getting up to 430, pulling back down to that 407.5 low. That would make a really nice head and shoulder bottom. That's just me kind of thinking of what could develop over time. That doesn't mean that's what's going to happen. But then we're going to be looking at the kind of the long-term downtrend that goes all the way back to 2023. And that's going to be back up in that 470-ish area. And that hopefully we can hit that long-term downtrend, big picture.
All right, here's soybeans, too legit to quit with the hammer candle yesterday. That's positive, right?
Yeah, that's positive. One of the things that also, well, there's a whole convergence of things that happened around yesterday's lows. You have a numerous moving averages. I think the lowest of the moving averages yesterday was the 50-day at about 1023.5. So we maybe traded through that by 2 cents. Also, if you do the retracement from that August low up to the August high, 1022 is the 50% retracement. So this has been a range bound market for the last year. We just went lower end of the range back to upper end of the range on that August move. And yesterday's low was right at the midpoint.
Gotcha. All right, let's go to some updated yield estimates.
StoneX trimmed its outlook for the U.S. corn and soybean crops yesterday. The firm now pegs average corn yield at 186.9 bushels per acre, down from 188.1. However, the firm raised its corn production estimate to 16.58 billion bushels, up from 16.32 billion. The rise in production was based on higher acreage reported by the USDA in its August 12th crop production and WASDE report. For soybeans, StoneX lowered its yield forecast to 53.2 bushels per acre from 53.6 and cut production from 4.26 billion bushels down from 4.43 billion.
Those are still damn big yield estimates, Brian.
They are. I think when these numbers came out yesterday afternoon, there was a lot of looking at some of the individual state numbers and saying, okay, corn production or corn yield should not have gone higher. Ohio, Indiana, a lot of griping about some of the particular states, especially in the Eastern Corn Belt. And I think that's really the area when you look at August weather that did probably see the most reduction from total potential is in the Eastern Corn Belt with as dry as the August that we had. But I think in general that this just shows that the trend of the crop from the August WASDE report moving forward should see decreases in yield. Now, the concern that I have just from how the USDA handled last year, because it's a very similar setup, right? We had a very dry August last year. We had a dry August this year. But the USDA raised yield on corn in September and in October. And it wasn't until we got to the ear weight conversation on the November report where we started to see them make a small reduction lower. So I don't know if they handled it the same way. I think there's a lot of pressure for them to get it right sooner than last year. Number one, because of how big the jump in yield from trend was in the August report. And then also now knowing what happened in August a year ago and what we had this year, it took them until January last year to get that big yield reduction. And by that time, a lot of bushels had already been moved out of the field, right? They were already priced at levels that were lower than many would argue that it should have been as far as price if the USDA had lowered the yield sooner. So I think there's a lot of pressure on them to get this right earlier than what they did last year.
I don't think they care about any such pressure. They're just like statistics guys. I mean, they're just going to roll with what they're given, right or wrong, with what data they're working with. You know what I mean?
I don't know. Maybe not.
That's what Pete would tell me if Pete was here, but I don't know. Up for debate. The StoneX numbers, people are giving StoneX shit. They're giving poor Arlen shit on X again about this. This isn't Arlen's survey, guys. It's not. They've been doing this survey since 1992 or some shit, and they've been doing it the exact same way. He posts it.
I don't know how you can give Arlen shit.
It's not his survey.
No, and
it's the old Doug Jackson survey. You remember Doug Jackson used to write for Stone.
I miss Doug Jackson, but that's a story for a different day. But and nothing against Arlen. I just thought that Doug was kind of the guy right when I got into the industry that was like, you got to listen to Doug Jackson. But I think people should be like, hey, Arlen's doing a really good job. Wow, the FCC or the StoneX numbers that came out were very close to what the USDA had. That is the whole point of what they're doing. They're not putting out numbers to make prices go up or down. They're putting out.
Yes, they are. It's a conspiracy.
I know,
USDA and Stone and the other everybody
else.
Yeah,
StoneX just wants prices to go down and take away volatility because that's what's really good for their bottom line, right?
No, exactly the contrary. Let's keep going.
Rainfall was minimal across the Corn Belt last week, while temperatures remained largely below normal. Drought conditions worsened in Ohio, Indiana, Illinois, and Missouri, with slight deterioration also noted in Iowa and Minnesota. Although drought conditions have expanded, only 14% of the region is currently affected. In the High Plains, scattered showers brought modest improvement to northern Kansas, southern Nebraska, and south central South Dakota. When we look at the percentage of U.S. areas experiencing drought, corn country, 9%, soybeans, 16%, winter wheat, 34%, spring wheat, 13%, and cattle country, 18%.
There's a lot of yellow there that wasn't there last week, and a lot of brown too.
Yeah, and then what's the follow-on effect from that? And we're starting to talk about things we've talked about the last couple of years, the river levels, Mississippi River levels. What is that going to do potentially for exports moving forward, barge rates? But one of the things last year that all told us was how dry that August was, and here we are, full circle right.
I had a river level map, but I neglected to include it today. The way that USDA does it, so those numbers Mackenzie mentioned, like the 9% of corn, that I think that the D1 stuff, or is that the D0, the yellow, which is just abnormally dry, I don't think that counts. So you've got a large portion of the Corn Belt now that's what they would call abnormally dry, but it's not in official drought country. But it's definitely an issue.
A shift in U.S. tax credit policy has caused U.S. biodiesel and renewable diesel imports to plunge. During the first half of this year, biodiesel imports averaged just 2,000 barrels per day, down 94% from the same period in 2024. Renewable diesel imports fell 85% to 5,000 barrels per day. Both declines mark the lowest first half import levels since 2012. The sharp reduction stems from a change in tax credits that took effect this year. Previously, both imported and domestic biofuels qualified for a $1 per gallon blender's tax credit. However, the Inflation Reduction Act replaced the blender's tax credit with the new 45Z tax credit, which only applies to domestically produced biofuels. Looking ahead to 2026, imports are expected to remain limited due to the tax credit changes.
Long story short, Trump was elected, and therefore these credits for imported feedstocks are no longer getting the imported feedstocks no longer receive the tax credits. You've got to use domestically produced feedstocks for biofuels to get the tax credit. So this should be excellent news for demand for things like soybean oil and corn. It's the market already knows this, but this is kind of EIA telling us, hey, this is what's happening.
Right. Then we already saw the price effect in soybean oil. That was something that happened. The tremendous amount of volatility going all the way back to, what was it, mid-June roughly, where we saw that initial run and then that big gap higher. But this is the policy that we need, is incentivizing using U.S. Grown product and not product that's imported from other countries.
Absolutely. What did cattle do yesterday?
Cattle futures were lower yesterday. Live cattle were $1.02 to $1.85 lower, and feeders saw losses ranging from $2.25 down to $3.27.
Cattle market thoughts, Brian?
Watching November feeders, the uptrend and the 20-day are coming in right around the same spot, and I think that was near a pivot low that we had. So much like the corn market starting to show signs of higher highs and higher lows, we're going to be looking out for signs of the opposite in the live cattle and feeder cattle, which would be lower highs and lower lows and the start of a little bit of a downtrend. But everybody knows it's high. Everybody knows it's overbought. And even just a correction without doing major technical damage could be, $10 or $15 in both of those markets.
Brian, thanks for joining us. Everybody have a wonderful weekend. We will be back on Monday.